In this seminar, we're going to look at the overall rent collection trends by using a unique dataset to better understand some of the key challenges that landlords are facing and will have to deal with over the next couple of years. We'll analyze data collected from several sources, including our own software, Landlord Studio, which gives us unique insight into rent collection trends and the impact that COVID-19 has had on the industry. We'll also explore how, by using software like Landlord Studio, you can navigate the current negative trends with better financial and time management capabilities. But first things first, my name is Logan Ransley, and I'm the co-founder of Landlord Studio, a rental accounting and property management solution that has helped thousands of people across the country save time and automate their rental accounting. Now here's a little bit of a backstory. Meet my business partner, Charles. Now, while Charles was living in London, he began looking at investing in rental properties because the technology salaries were high and the market was right, so he thought, where else better to put your money? Except there was one problem. He didn't want to use a spreadsheet to track his income and expenses. When he couldn't find an app suitable for the job, he ended up building his own one. After putting it on the App Store, hundreds of people started downloading it and leaving positive feedback. He realized he had just solved a massive problem in the marketplace, that there really wasn't anything else suitable to just simply track your income and expenses. Now here's what we're going to cover. In part 1, I'll take you through an overview of the data, insights, and emerging trends that we're seeing happen right now. For this, we'll use a segment size of around 12,500 active rental properties across the United States to see how rent arrears and vacancies are increasing. We'll also cover the emerging trends of strong real estate markets, despite all the uncertainties, and how average rents have fallen in several key cities. With this, we'll further analyze why we are seeing these trends and what these trends mean for the future of the rental marketplace. Throughout 2020, our team saw clear trends emerging in the rental market that coincided with the impact of COVID-19, the government stimulus action, and shifts in renters' demand. Among these trends were a few key insights, including an increase in missed and late rent payments due to the arising financial pressures on landlords and tenants. The impact of COVID can be seen most clearly in the months of April, where missed rent payments increased by 2% compared to March. This was also seen in October, where missed rent payments increased by 2.3% compared to September. And finally, towards the end of the year, as on-time rent payments dropped by over 4% between December and February of 2021. In addition to the increase in late and missed rent payments, occupancy rates at the end of the year and into 2021 have seen a gradual decline as well, with Landlord Studio data showing the average occupancy rates dropping 2% between October and February and falling below 95% for the first time in over 2 years. The data is starting to tell a very interesting story. While major cities have seen dramatic drops in average asking rents, the affordable mid-sized markets continue to boom. This trend is driven by an increased adoption of remote working places for many people, as renters are now looking for homes with more space, preferably a home office, and of course more affordable rents. Many renters are also less willing to commute great distances. With this move away from larger cities, we've seen a rise in vacancies in higher cost cities like New York, San Francisco, and Los Angeles, which has in turn led to massive decreases in rental prices in these areas. However, despite all the negative trends we've outlined so far, the market continues to look strong. Government aid has helped support some of the most vulnerable individuals, which in turn has reduced the risk of late and missed rent payments during a financially difficult time. And houses are flying off the market because of a supply shortage, an increase in demand, which is due to a spring freeze in buying, paired with historically low interest rates and changing job situations. With the end of the pandemic closely tied to the rollout of the vaccination, we're likely to see a continuation of migration away from city centres for 2021. We expect this to drive the rise in available housing for rent in these areas and a continued drop in asking rents, though slower than it has been. Suburban areas and mid-sized markets have become increasingly desirable for both renters and first home buyers, with more space being a key draw as work from home orders continued to get extended. Other desirable traits are a personal outdoor space, as well as proximity to beaches, trails, and other open spaces such as parks. A less positive but equally important factor for rising vacancy rates is the growing concerns for landlords around evictions and increasing numbers around rent arrears. With the eviction moratorium having already been extended twice, landlords need to be very careful about who they rent to. Now, further government stimulus action in the form of the $1.9 trillion stimulus package was signed into law by the Biden administration on the 11th of March, along with another stimulus check and the extension of an increased unemployment, which includes aid for three key areas of housing. The first is additional financing for emergency housing vouchers, essentially extending the Section 8 program. This aid is to support those that are homeless or at risk of becoming homeless and will be distributed directly to the local housing authorities. The second area is specifically for homeowners. There has been no funding dedicated to assisting homeowners since the pandemic began. And so the American Rescue Plan designates $9.96 billion to provide direct assistance to the homeowners themselves. This is a new fund, and qualified individuals will be able to use this money to help pay mortgages, utilities, pay back taxes on properties, HOA fees, etc. Thirdly, the American Rescue Plan includes $21.55 billion in emergency rental assistance to augment the funds that were provided to the states and territories in December. These funds can be used by renters and families to pay the rent and utilities so that they can stay in their homes. We've included a few resources so you can familiarize yourself with the rental assisting programs in your area and share these with your tenants if necessary. With this extensive financial relief package, the continued aggressive rollout of the vaccine, we wouldn't be surprised to see the market returning to almost pre-COVID normality towards the end of 2021. With all this said, if 2020 has taught us anything, trying to predict the market's future is a fool's game. With the increased uncertainty caused by COVID-19 and a rapidly changing market, landlords need to better prepare themselves better than ever with the right knowledge and tools ready to face the unexpected.